never forget that capital assets and non-current liabilities are never recorded. Only at the government-wide level are they recorded. This is what I was talking to you about, the dual track. And we'll take a look at examples. I'll give you an example again from the last class. You record an encumbrance. What do? You debit encumbrance and credit encumbrance outstanding. That entry is made under modified accrual basis. How about accrual basis? Nothing. Zilcho. Nothing. You record depreciation. Under accrual basis, you debit depreciation and credit accumulated depreciation. Under modified accrual basis, nothing. Because under modified accrual basis, we don't recognize depreciation. You make a payroll. Bless you. You have payroll. You debit payroll expense, credit cash. Same under both modified and accrual basis. 3 different transactions recorded 3 different ways. A transaction that can only affect governmental funds but not government-wide, transaction which only affects government-wide but not government fund, and a transaction which affects both of them equally. So we'll be taking a look at, and that's what this dual track is. This is a journal entry. I think we went through this before. When you see a journal entry like this, does it cause any concern to you? Is this an example of poor financial management? Yes. Well, let's look at the answer. Generally, when you debit the fund balance at the start of the year, that means you're using your reserves. Okay? And unless you have a very good reason, your revenues should always exceed your appropriations. Revenues should always exceed appropriations. But if you have a lot of money sitting there in the bank, you might have to use that money. Because the taxpayers might say, wait a minute, you're sitting with $1 million in the bank and you want to raise my taxes? Go get it from that bank account. That's when you have this journal entry. You're using $388,000 from the bank because your estimated revenues are less than your appropriations. This is not a normal journal entry, but it can happen. The beauty of this journal entry is that at the end of the year, when you're ready to close the year, you reverse this entry, just like the encumbrance entry. So what would you do? You would debit appropriations, credit estimated revenues, and credit budgetary fund balance. You have to reverse it so you can close the budgetary accounts. All budgetary accounts have to be closed at the end of the year. You cannot leave them open. They have to be closed, except for encumbrances, which we'll talk about. And this is what that is and I don't mean to really go into this too much, but I think you should understand this, because when you go out work, not that you'll be working in government, but if some of you might end up with that, it's not about governmental accounting, it's about government financial management. In fact, I run a certificate program in the program, the master's program, which is a certificate in government financial management, which teaches you how to manage governmental finance, a mix of budgeting, finance, accounting, all together, auditing. And what this basically says is that we should always have money in fund balance, some reserve. Here, what is it? 10 to 25%. If your budget was $1 million every year, you should have 100 to 250,000 sitting in fund balance in case something goes wrong. But this is a very tough issue because the taxpayers don't want you to have money in the bank. They rather have you use that than get taxes from them. So you have different interests. If you are a creditor, if you're S&P, you want the government to have more fund balance because that just in case if something happens, the creditors will get paid. See the different interests each party has?